Morning, everybody. Welcome. All right, we continue with our insurance talk. So the first time, this is the fifth lesson we're doing. The first lesson we did, well, we spoke about trust and trust fund and the wills as well. And like I encourage everybody, it's very important to have your will in place, and also very important to make sure that your policy, if you have insurance already, is in trust fund. Please, it's in trust. Second, we spoke about 40% inheritance tax. So the 40% inheritance tax is the people who have an estate. And if your estate is more than 325,000, which is the threshold, you need to start looking for the 40% inheritance tax. How can I either avoid that, because there is ways to avoid it. How can I avoid it? Or where will I get the money to pay for it if anything was to happen to me? Number 3, we spoke about life insurance, because I know some people confuse so much life insurance, and I'll call some people and they'll tell me, yeah, I have life insurance. For how long? What's your term? No, it's for life. So we spoke about the difference between life insurance. That was about our third. And then our 4, which was last week, we spoke about terminal illness, the difference between terminal illness and critical illness. So today is our 5th lesson. And I'm going to tackle the fact that a lot of people are calling me, asking me, oh, can I be insured? Can I be insured? So I thought, let me just put this out there so that if anybody is listening to it and you feel like I cannot be insured because of A, B, C, D, well, good news, everyone can be insured. The difference will be probably my insurance will cost more than my neighbor's insurance, but everybody will be insured. The difference will be as well, I will be insured, but with the medical that I have will or might be excluded from my policy, from whatever I'm taking. Okay, but again, you're insured. The only difference is either whatever you have is excluded, so it's not included, or your insurance will be so much more expensive. Now, there's a lot of people calling saying, they've written themselves off. Don't write yourself off. Please ask an insurance advisor. Call me. Ask an insurance advisor if you are liable to be insured. And you are. Everybody is. So the last time when I was doing the video, before it cut off, it was just me saying thank you to people who have called me already and have taken insurance already, and to encourage those who have not taken insurance yet to take insurance. The earlier, the better. In Swahili, we say, mapema ndio best. All right. So I'm going to talk about the facts that is factored in. We have 5 factors that is factored in before we can give you the quotation. So some people say, I saw an advert, the insurance, they'll call me and then I'll give them a quote and they'll be like, oh, but that's so expensive, Lydia. I wasn't expecting that. But because of the advert they've seen on either TV or wherever you've seen your advert, because the adverts always say from. So get this straight, guys. It's not, they don't say it's £5. They've never said it's £5. They never say it's £10. They always say it's from. Because by the time all these five factors are factored in, then that is when they will know how much insurance is. Nobody can look at you and just say, oh yeah, what's your name, Lydia? Oh yeah, you can pay £30. That will never happen. We have to put your details in the system, and then the details that we put in the system, that's what's going to determine how much money you're going to pay every month for your insurance. Now, let's talk about the factors. Factor number 1 is age. So you cannot be 50 years old and expect to pay the same amount that a 30-year-old is paying. Or you're 70 and expect to pay the same amount that a 50-year-old is paying. That's impossible. So that's the age. So according to your age, that will determine how much your premiums every month will be. Number 2, your lifestyle. When I say lifestyle is if you're smoking, if you're drinking, if you're taking drugs, all those, and your BMI, okay? All those is lifestyle. If your BMI is big and they say you're obese or you've crossed the line, because we have a line. So if you cross that line of now you're going towards obese or you're bigger than your height, of course you're going to pay more. Okay, so we have BMI in your lifestyle. Lifestyle is BMI, smoking, drugs, if you're using drugs, even vaping is part of that, or even if you're an alcoholic. With alcohol, it's not that bad because some providers will allow you up to 20 units, 15 units per week. That's a lot of units. Unless you're alcoholic, then there's a problem. But if you're not alcoholic, you're just drinking 6 units a week or 10 units a week, that's fine. Smoking, drugs, vaping, BMI, that is part of a lifestyle. So you cannot have these things and then tell me, but this person is paying 20 pounds. Why am I paying 80 pounds? It's because of your lifestyle. Okay, so we have age and we have lifestyle. And then number 3, we have underlying medical issues. If you have a medical already, your insurance is going to be higher. Some of them very, very high. Especially, I have some clients who have diabetes. They have one client who have diabetes, high blood pressure, cholesterol is high, BMI is high, and they're smoking as well. So all these 5 together, wow, insurance don't like it. Instead of you paying probably 20 pounds, if you didn't have all these 5, you end up paying maybe even 220 pounds. That's how bad it is. So medical as well, which is nobody's fault. It's not your fault. It's no one's fault. But if you have underlying medical issue, that affects your insurance big time. Big time. But you can still be insured. Because today we are talking about, can everybody be insured? Yes, you can. But all these factors have to be factored in before they can decide, okay, what insurance are we going to give you? And then number 4 is the term. So we have something called term, of course, if you're taking insurance. So somebody tells me, I want to be covered up to the age of 70. And someone say, I want to be covered up to the age of 90. Definitely, you're going to pay different premium. The person who is covered up to the age of 90 is going to pay more than the person who is covered up to the age of 70. Because when you get to 70, your insurance expires. It's done. So the person who is covered up to 90, they still have 30 years that they're covered for. So you're paying for that 30 years. You're still paying. So you cannot compare again your insurance with somebody who is covered up to the age of 68. And the thing is, a lot of people who are taking insurance either by yourself on the phone or internet or whatever, we always run for cheap. And I always say cheap is always expensive. Cheap is the most expensive thing at the end. You run and you take up to 68 or 65. By 65, probably you're not even retired. You've not finished paying your mortgage. Probably some people, their children are still younger. Your insurance is done, which means you have to take another one. Now you're 65. Your insurance is going to be very expensive. And probably at that time now, the BMI is high. Because by 65, some of us, losing weight is so hard. So probably your BMI is high. And probably you even have medical. Now you have 3 things fighting against you. Your BMI is high. You have medical. Your age is, you're a little bit more older. So if you're taking insurance, just take it up to the age when you know that now, when I get to this age, all my children are older now. Nobody depends on me. And I also have paid for all my mortgage if you have a mortgage. So now you're free. So you can take something just small for your funeral cover. Okay, at the end. And then we also have sum assured. So sum assured is how much you want to take. Some people say, I want to be insured for 500,000. I have some of my clients who are insured for 900, a million. And then somebody comes and say, oh, I just want to be insured for 100,000. And then the person who is insured for 100,000 now wants to compare their insurance and say, but why am I paying high? Why is this person paying less? Because you have taken 900,000 and somebody else has only taken 100. So you cannot be paying the same premium. So your premiums have to be different. Yours have to be higher because you're taking more money than the person who is taking only 100,000. So now, 5 factors: age, if age is against you; lifestyle, if your lifestyle is against you. But things like lifestyle is things that we can actually change ourselves. Because lifestyle, if your BMI is high, you can work on that. If you're a smoker, you can work on that as well. If you're You're taking drugs, you can work on that. If you're alcoholic, you can work on that. So number 2 is something that we can work on. Number 1, we have no control over that. Number 2, you can work on that. Number 3, medical as well. We have no control over that. We have no control. Today I'm sick and this. So number 3 is medical. Number 4 is term. How many years? That one, of course, again, we have control over that. And then the sum assured is the 5th one. Again, that one too, we have control over that. So you can decide, I want 100 or I want 500,000. So all these things, all these 5 factors are things that we factor in before we can give you a quote. So next time, please do not compare yourself with someone else. Because if you're comparing yourself and you say, oh, but so-and-so is paying only 30 pounds, that's what I want to pay. So the person will give you 30 pounds insurance, but that means that whatever you'll be getting will be so minimal like this. That's basic compared to the other person who's paying 30 pounds but getting the best. It's because all these factors is not against them, but it's against you. Because you're old. Your lifestyle is, wow. Probably you have medical. You want a lot of money. You want to be covered up to the age of 90. So you'll be paying more.